That was the week, or that was the 2 weeks for May 6th, 2022. Keith was in Hungary last week. I was actually on the East Coast. So this is our 2 weekly show. Keith, one of your great heroes, Vladimir Ilyich Lenin, famously said something, I can't remember exactly what it was, but something like, in some years nothing ever happens, and then you have whole centuries in 1 or 2 weeks. And it seems as if since you've been away, there's been an enormous amount of things happening. The market has collapsed, although that's not necessarily surprising or unusual, but it's been quite a dramatic collapse. Nasdaq dropped 5% on Wednesday, or was it Wednesday or Tuesday? How significant do you think this is? Is it just a correction, or is it a significant structural reshaping?
Well, that is indeed the question in this week's That Was the Week newsletter. You'll be pleased to hear. So you're asking highly relevant questions. Well done.
Well, I read the newsletter, so I'm feeding you a softball, Keith.
So there's a tremendous correction going on in public markets that is now, probably 3 months in. So this week has been especially dramatic, both today and yesterday. But it's part of a trend, and some stocks are down as much as 70-80%. So it's a dramatic correction driven by the popular belief is it's driven by macroeconomics, especially interest rate rises and inflation rises that are triggering the interest rate rises, and that is forcing investors to readjust the price they're prepared to pay for stocks. So it's structural. It seems structural.
Are you saying that's right or wrong? When you said popular opinion, I'm assuming that there's popular opinion and then there's Keith Tier opinion that knows better than popular opinion.
Well, my opinion is that it's all sentiment driven. Those things do drive sentiment. Sentiment is much more pessimistic than is justified by the macroeconomics. And so there's an exaggerated reaction in the stock markets. And, who knows when, but in general, if you were to buy stocks at these prices now and look back 2 years from now, you'd be very happy you did it.
And again, you know a lot more about this than I do, but the price of the market was radically inflated.
Yeah.
A few months ago.
Yeah.
It rose, particularly in the tech sector, with irrational exuberance during COVID. So we're seeing, whether it's a correction or a downturn, it's still much higher than it was.
Yeah, it is. It is. The Nasdaq ticker symbol, if you look at it with a long enough range, let's just see if I can do it here. Nasdaq. Yeah, I can do it. So if you look at the Nasdaq over 5 years, this is what it looks like. So it's basically
it's
about
exactly what I said.
It's a year and a bit's worth of growth has been retrenched.
And to what extent do we need to differentiate certain stocks from others? So, for example, Facebook has lost significant value, and there are a lot of very pessimistic, bullish people, sort of bearish thinkers on Facebook, whereas other stocks have just been forced down because of the general sentiment in the market. Amazon, for example, or Google, or Apple. So are there some stocks in tech that you think have been seriously tarnished and others are just riding the wave?
Facebook, this is Facebook. So it's a lot more dramatic. 2 years worth of growth has been taken back. So I think the answer to the question is it's differential. Some is the COVID beneficiaries at the end of what everyone thinks of as the end of COVID, retracing back to a pre-COVID kind of number. So some of it is
so the PayPals of the world who benefited dramatically from COVID and the virtualization of all economics.
Yeah, DoorDash, And then others like Airbnb, which were punished by COVID, are making a comeback. I mean,
and Uber, I assume, as well. I mean, but even that sector, I saw that Lyft was really hit hard, and Uber less so, because some businesses in in these sectors are more successful than others.
Yeah, exactly.
So, in other words, for people who are speculating in stock, are you suggesting that each company contains its own particular truth? You shouldn't buy categories?
You shouldn't buy categories. Each company does contain its truth, but at the same time, there's a structural. We called it on an earlier show. We called it the reduction of multiples that you pay for growth. So, Bill Gurley this week tweeted that if you're paying more than 10 times annual revenue, you're overpaying. And at the peak of the market, people were paying 100 times multiple of revenue. Sometimes
Are
more.
the smart people? I always assume that the smart people are making money. Have some of the smartest people been caught by surprise here?
Yes, I would say so. But a lot of people haven't. Gurley is one of those. Gurley was always against SPACs, and SPACs have done very badly.
You had your little flirtation with SPACs, Keith. That's one of the problems of doing this show, is you can't rewrite the past.
You can't rewrite the past. No, I think SPACs as a going public mechanism for a company that has large capex and doesn't anticipate short-term profits will ultimately still happen. But in a market like this, they get punished. But there are exceptions, like Forge Global just went public using a SPAC. And if you look at Forge Global, and it's only been public a short period of time, but this is its stock price. Remember, a SPAC starts at $10 a share. Well, it's at $32 a share. It's up 20% today. So there are, countervailing stocks if you know what you're looking for.
And then some of your models of the future of growth have been hit very hard. Tiger Global, for example, we've been talking about them endlessly.
Yeah.
They've been hit particularly hard by this, haven't they?
Well, Tiger Global, anyone that invests in late stage venture capital anticipating a soon to happen IPO, where they're paying, pretty hefty multiples of revenue in the anticipation of a liquid public offering, have been especially hit. And not just Tiger Global, lots and lots of hedge funds are down between 30 and 60% just in a couple of months. And for a hedge fund that allows their investors to redeem, that is to say, take their money out, that's a major problem.
Are we going to see any blood on the tracks, on the streets? There are VCs, hedge funds, banks even. Are any of them in trouble with this significant shift in the market?
Anyone that has redeemability is potentially in trouble. A couple of hedge funds.
Explain redeemability, Keith.
Well, redeemability is when you put money into a hedge fund, and unlike a venture fund where the money is locked for 15 years,
okay.
With a hedge fund, it's month by month. You can ask for it back.
So people will just come in and ask for their money back, and then the funds will die.
Yeah, and it's not all the money; it's whatever it's worth at that moment. You can ask for it back.
So people will take their losses, assuming that it's only going to get worse.
Yeah, and that has happened. A couple of hedge funds that were. You remember when GameStop shares were being traded up by Robinhood? Yeah. The hedge fund that was hit there because it had short on GameStop has gone out of business. So they can go out of business, hedge funds. VCs much harder to go out of business. They won't. But they might not get another fund done if they've done especially badly. I do think.
Sorry, go on.
I was going to say, I do think venture is. We always stress this, and the editorial this week's about it. But you really have to differentiate between the stage of investment of a venture fund to know what the impact is.
And then, there's again, I don't want to sound too cliched here, but the famous phrase, when the going gets tough, the tough get going. to what extent is this market a very sharp, painful reality check? Are we going to see the end of crypto here? There was a really interesting piece by Farhood Manju in the New York Times this morning. I think it's too new for you to include in your newsletter, but basically suggesting, as I've been suggesting and others, that this is just a scam. Is it possible? I know you don't think that, but is it possible that this whole crypto thing, the whole crypto house, will just come falling down, and then in 6 months or a year, we'll be thinking about crypto as we thought about Enron?
No, I don't. I really don't think that is very likely at all. In fact, if you look at the counter signals to that, yet 2 days ago, it was announced that Elon Musk has raised $7 billion for his Twitter purchase. And if you look at who's invested, Binance was one of the investors, which is a crypto exchange. Andreessen Horowitz made a large bet, putting money in.
Yeah, but that's got nothing to do with crypto.
Oh, well, it actually does, because if you look at the vision that Musk has for Twitter, it does include subscription and crypto as part of their business model. And if anything, it could take crypto mainstream to larger numbers of people with a reason to use it and a purpose.
You may be grabbing at straws there, Keith. So you're suggesting that crypto is going to creep back in the back door through Elon Musk and Twitter?
It's already major. I keep a running list of who is investing in unicorns, and if you look at the 2022 list to date, it includes lots of crypto funds. So
but it comes back to the question: just because more money is going into it, is it possible? And maybe this is a bigger conversation. Is there really a there with crypto? I'm still not in any way convinced. I mean, the NFT market has collapsed.
Honestly, I think that the Berkshire Hathaway statement this week that even if you offered him all Bitcoin, he wouldn't buy it, is just inane. It represents the octogenarian generation not understanding what's new and different. And I honestly think that...
Yes, but just because it's new and different doesn't make it credible. I mean, there's lots of new and different things that are busts, just there's new and different things that work. I don't think that's a credible critique just because some 80-year-old is criticizing crypto, saying, well, that's not a credible...
I think one of them was a 90-year-old, but...
well, even a 100-year-old, so what?
No, but let's embrace what you said. That's exactly right. There's a longer conversation about why it's inane. The reason it's inane is the digitization of value is inevitable. Value, which takes physical form, will take digital form, and when it takes digital form, it'll be able to travel and be exchanged.
Well, no one's arguing that, but that's not an argument for crypto.
No, well, what happens is when value takes digital form, different piles of value can adopt different digital forms. They can all be compared to each other, and so let's call one Filecoin, which is the digital form of the value derived from storing files in the cloud, is a real store of value for that purpose. And it has genuine value because genuine behavior sits underneath it. And so I think you're going to see digital stores of value in the plural.
We shall see, Keith. I think this is the great question, whether crypto is for real. It's certainly not going to get resolved this week or this month or even this year, but it will be resolved, and we will talk about it in the future. What about our old friend Elon Musk? You brought him up. He's very much back in the news with his Twitter deal and the fact that he's found another $7 billion. What's Elon been up to this week, or what hasn't he been up to? Well, he's not running for president, but he's pretty much doing everything else.
Yeah, he's had a successful SpaceX mission this week, as well
The guy, he can't sleep. He looks terrible, but I guess to do what he does, you have to look terrible.
Yeah, but what happened? What happened is you remember that he sold a lot of Tesla shares in order to fund his Twitter purchase, and he also leveraged a bunch of Tesla shares to get debt. And what he's done this week is persuaded some big names to put up $7 billion worth of the purchase price. So about 15%. And join him in his mission. And I think if you look at Twitter as an underutilized asset, it has about 300 million daily users compared to Facebook's 2.7 billion users.
Yeah.
The upside for Twitter, if he gets it right, is about 10 times its current size. And so obviously these people putting money in believe that he's going to do that. And it also shows.
Well, again, I'm not convinced of that. Just because Facebook's bigger doesn't mean that everyone who's on Facebook would want to be on Twitter. I mean,
Yeah, but
that's another. A lot of grandmas on Twitter who are never on Facebook who are never going to go onto Twitter for one reason or another.
Well, I'm not saying you should believe it, but I'm saying the people who put up the 7 billion believe some percentage of that will happen. So they're paying today's price of 300 million daily users for something they believe will have a lot more than that in the future.
And what's happening now at Twitter? Is it clear that this will probably happen, that Musk will clean shop and bring in his own team, and that many of the senior people at Twitter will be forced down?
I think there'll be a natural evolution. He said this week that initially he'll become the CEO of Twitter if he buys it. I think the only thing that could stop it is him changing his mind about wanting it, which I don't expect to happen, but you can't rule it out. And I do think, by the way, it gives the lie to this stock market readjustment, meaning that venture capital is also in desperate straits, because here we had a week where venture capital poured $7 billion into something that they believe in, which is what they're there to do. So I don't think venture capital is they may have crocodile tears about the stock market adjustment because it helps them reduce valuations in the investments they make, but actually they remain gung-ho optimistic about tech in the future, as evidenced by this investment along with Musk.
What about your firm, Keith? Are you inevitably cheerful because your startup relies on cheerfulness, or does it not really make any difference to your startup whether the market's up or down, because you're in the intelligence business?
Well, yeah. What we do is we observe that the world is producing more and more unicorns. The 2022 numbers to date are not down from 2021. So that remains the same. So private companies are becoming unicorns and bigger, faster. And that observation leads us to ask the question, is it possible to buy shares in those unicorns earlier than others? And we target the Series B round.
And I would assume that the prices are down. This is, for people with nerve, with backbone, this is a great time to be
a buyer
coming into the market if you've got cash, if you've got resources.
Yeah, it's a great time to be a buyer. And so now, what then happens to your investments? Do they grow as fast as they did last year or slower? Well, at the earliest stages, it's probably not going to change that much, the growth rates. But certainly by the time you get to a C and a D and beyond round, the later rounds, you can anticipate that the valuations will be lower than they have been in the recent past. So it does impact both positively and negatively. But overall, it should work itself out. When I did my model in the UK in 2017, 18, and 19 with my fund, we invested in 6 companies via a partnership, and those investments turned into 17 times our investment within 3 years, prior to this huge 2020, 2021 acceleration of value. So it's a great model in a normal market as well as the market that we've just been through.
And do you think that, coming back to Musk and Twitter, do you think he's pretty much won the first argument about freedom of press? Freedom of speech, you don't hear people screaming as much anymore. He's going to change it. He's going to let Trump and other conservatives back on. So it seems like he's already had a degree of success. Is that fair?
Yeah, this week's essay of the week speaks to that. It's a long essay and very well written called "Freedomists and Nazis." It echoes the last.
Although any essay that mentions the Nazis makes me like, whoa, it's a bit stupid, right?
Well, it's kind of a clickbait way of making the point we made a couple of weeks ago, which is the perception is that if you're for free speech, you're helping the right wing. Why? Because the right wing have largely been banned, and you'll be allowing them to come back. Therefore, you must be right wing if you want free speech. And this essay is a much better version of my editorial, saying no, that's wrong. And it's a really good read. And I do think it means that with the $7 billion he got this week, that Musk has the wind in his sails when it comes to pushing the decision about what can and can't be published back to the law. It's not that he...
Yeah, well, clearly I think, again, in my view anyway, the decision to throw Trump off was absurd and reflected very badly on the management of Twitter. What about, we had this conversation last month or a few weeks ago, Keith, all your supposed left-wing friends who are critical of Musk and critical of quote-unquote free speech, are they beginning to change their minds?
No. I think it's become... in polite company where you have friends on both sides of this argument, you just don't talk about it anymore because it's such a divisive issue. In fact, I think what's happened is the Supreme Court leak this week has replaced Musk as the primary thing everyone's talking about. And so luckily you can avoid the arguments on Musk.
Well, it's been an interesting week. What about your startup of the week? One of the companies caught up in some of the most interesting ups and downs in the market.
Yeah, I chose Netflix. And I chose Netflix because last night I watched first 2 episodes of the last of Ozark, which is on Netflix. And I think Netflix, despite its loss of 200,000 users, is just an amazing company that is now going to have to reinvent itself for growth, because growth is what gets valued. And I think it's going to do that globally. I think that's where the growth is going to come. And I think anyone that sold their Netflix stock probably will wish they hadn't by the end of the year for sure, as Netflix turns it around. The content is what makes it special. And it just has fantastic content that it allows you to binge watch, which a lot of the other services don't let you do anymore. They've gone back to weekly release schedules where you got to wait for an episode. And I generally think Netflix has got that right and will prosper. So I made them the startup of the week because they're starting up again.
Yeah, and they've started up before, and they've been hit hard by the market, by changes in tech. They always seem to be able to think ahead of the game. So I tend to agree with you. I don't buy stock. I don't speculate in that area. But if I did, I would buy Netflix. Like Amazon, they seem to be perpetual winners in the market.
Yeah.
And they're still run by their original CEO, their founders. So in contrast with Amazon, obviously the original management team is still there.
Exactly.
And what about your tweet of the week, Keith?
Well, the tweet of the week comes from Dan Rose. And Dan Rose, for those who don't know him, played a major role at Facebook during the last 10 years as a corporate development executive. He now is chairman of Co2 Ventures, which is one of the venture funds we talk about a lot on this show. And what he did this week is he tweeted his memories of the last time that markets took a turn as dramatic as they did now. He goes back to the early 2000s when he was at Amazon, and they lost 95% of their value as the stock market adjusted. And then he went to Facebook, where he negotiated a down round in 2009, and then went through an IPO in 2012 where they lost 50% of their value after becoming a public company. So he basically makes the point that he's got plenty of experience of markets like the one we're going through, and it all turned out well in both of those cases, as long as you were patient and didn't panic. And he's got a long thread. It's
it's certainly the mother of all downturns was the .com bust.
Yeah. So his final word.
Nothing will ever be like that. I mean, I remember at the end of 2000.
This
was an astonishing event. I mean, I think it affected people like us because we were in tech. It was a smaller community. It didn't affect the broader community, but it was astonishing.
Yeah.
We went from from plenty, from riches to massive, absolute poverty in the space of about 2 weeks.
Yeah, this is it's an 11-part Twitter stream, and this is the final one. It's worth reading. It sounds like Shakespeare. Embrace the abyss, or the abyss. Every great leader has their mettle tested in crisis. Every great company overcomes existential threat. A hero must traverse the abyss. Nobody chooses it, but everybody eventually faces it. How you respond, that is all that matters. And he then champions the book, A Hero with 1,000 Faces, the collective works of Joseph Campbell, which I just wonder if that's him or whether it's an ad. I think it's him. Yeah.
And finally, Keith, I know you're an active player in the 90s, and you're in the book, The 90s. I'm not sure how you found out about that, but you're one of the people cited in a wonderful new book about the 90s. So tell me about that.
I actually didn't know I was going to be in the book. You told me about it, is the truth. So sorry, this is one of my kids calling me, and I need to tell him that I can't answer.
Tell him to sell his crypto.
Now, paradoxically, BDO 4 in the UK also has a 10-part series called The 90s, which I'm guessing isn't a coincidence. And I'm interviewed in that, both of which are linked in the newsletter. And they focus in on the creation of Siberia Cafe in particular, which was the world's first internet cafe that I was part of the founding team for. Why did they focus on that? Because it was so popular at the time that there were lots of TV and radio crews that came to interview me, my wife, David Rowe, and Eva Pascoe, my co-founders. So there's lots of media that they can draw on to tell the story through it. That's why it appears, is my guess. It was a great time. My wife became so famous that it became boring because she was being interviewed every single day by Vogue or a Brazilian TV station or, blah, 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 blah. It was nonstop. And you realize that fame is highly...
What was she being into? Why was she famous? What had she done?
Well, when Siberia was formed in 1994, it was one of two companies that we created. The second one was EasyNet, which was the internet service provider for initially the UK and then eventually most of Europe. And me and David Rowe were running EasyNet. Siberia was an afterthought. We had a storefront. We didn't know what to do with it. So we decided to put a cyber cafe in, which was a sci-fi book concept, but no one had actually built one yet. So we put one in, and it became the thing that people were interested in. EasyNet not. But we had a much bigger business in EasyNet than Siberia would ever be. So Jenny and Eva Pascoe ended up running Siberia, and that's why they became famous, because it was famous, and they were the two women who were credited with running it.
Well, if you've lived through the 90s, I think certainly the market shift this week is minor. And Keith, we will be back next week, where hopefully things will be back to normal. And we can talk about free speech and Elon Musk. So have a good week, and we'll be back in mid-May.
We certainly will. Thank you, Andrew. Bye for now, everyone.